How is everyone doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be taking a look at ICBA's quarterly report called Advocacy in Action. And this is one of my favorite reports that they put out. It's a great little two-page PDF that basically just summarizes all of the current hot topics as far as legislation goes in the banking world. And it's a great thing to just look over, check out real quick. And like I said, they produce this on a quarterly basis. So this is the Advocacy in Action for the first quarter of 2025. Now, a lot of these issues I have discussed in previous episodes when I've covered these quarterly reports. So not a ton of necessarily new things here, but definitely a few updates on a number of these topics, but we'll kind of run through them real quick. I'm not going to cover every single one in depth, but I'll try to get, kind of just do a quick overview here for everybody. So, But we have the ICBA promotes a new regulatory and tax agenda for the 119th Congress. This is called their Repair, Reform, and Thrive, ICBA's plan for powering local economies. Now, I covered this in an episode last week. They have a great website for this. So if anyone wants to go check that out, I would highly recommend it. So what do we have? Some of the things on the bill. Well, we got major tax legislation. We'll see a lot of things that are going to come up in regards to taxes with the new administration, farm bill and support for agriculture. So ICBA has recommended 6 key principles for a new farm bill and several legislative priorities. These include Apple funding for commodity programs, rural broadband, and crop insurance. So still a lot going on there with the farm bill. That's been a real battle over the last couple of years. It's been a timing issue. It's been, a lot of bipartisan support, but a timing issue there. We've also got the Durbin-Marshall Amendment expansion legislation. So IBA opposes legislation to create new credit card routing mandates, expanding on the Durbin Amendment's interchange restrictions. Now, this has been a huge battle again, a couple years on this one. Again, I understand what they're trying to do here. They want to basically try to break the monopoly, if you will, by MasterCard and Visa, and they want to try to offer consumers a third alternative. The problem there's not absolutely somebody there that has the infrastructure and stuff to kind of run with it right from the jump. So that's what I see as kind of the problem here. I think if we could get a third party lined up that was like ready to go and we had the infrastructure in place, I think it would make getting this passed a lot easier. But like I said, there, definitely a battle continues over that one. ACRE, so tax incentives for community bank, agriculture, and home loans. We'll kind of see what happens with that. ICBA check fraud task force. The tax force composed of more than 40 community banks and state bankers associations was created to explore solutions to prevent, detect, and mitigate check fraud. So they're continuing to put that out. ICBA did publish a great check fraud guide back in May of 2024. I did cover that in an earlier episode last year as well. So if you want to go check that out, check that out. Now, brokered deposits. This is definitely going to be probably one of the hotter issues throughout the year here. So ICBA has called for the FDIC to withdraw its recent brokered deposits proposal and retain the 2020 framework. The proposal would rescind previously approved primary purpose exception applications and define a broader group of third parties as deposit brokers. These changes would effectively classify more deposits as brokered and fewer deposits as core, creating a high degree of regulatory uncertainty in the banking system. And this kind of got dragged into the whole oversight of third-party vendors, basically banks working with fintech companies. And I don't know why they muddled those two issues together. They should have, if they want to increase oversight of third-party providers, third-party vendors that banks are dealing with, like that's fine. But then they kind of threw this brokered deposit issue into the whole mix, and I think really, causing more problems than they needed to. Overdraft, obviously a big thing on people's radar, with the CFPB's final rule on overdraft services that will cap fees at banks and credit unions with more than $10 billion in assets. So they're obviously going to continue. There'll be more arguments and discussions on that one. Restricting the sale of trigger leads. So again, this is bipartisan legislation. Again, not really sure why this one has not gotten approved or gotten pushed through, because it really should have been at this point. Now, again, what trigger leads are is so basically you have your credit bureaus. You have Experian, TransUnion, Equifax. So this has caused a lot of issues, because like somebody comes to the bank and they apply for a mortgage, and then the next thing they know, they start getting all these phone calls from other mortgage companies basically saying, hey, if you haven't made a decision yet, we can offer you this and we can offer you that. And it gets highly annoying, because people can literally get dozens of phone calls. But what happens is people think it's the banks that are doing this, and it's not the bank. The bank just goes to pull your credit report as part of the underwriting, and then the credit agencies are the ones that are sending these leads, these trigger leads, if you will, over to other mortgage companies that are paying to get these leads. So it's basically trying to stop the credit bureaus from putting out these trigger leads and putting them out there. So that's what's happening with that. And again, that's bipartisan support on that. So hopefully that will get put through rather quickly. As we go to the second page here, we got stable coins, decentralized finance. Still working on that, and that kind of ties in with the central bank digital currency. So President Trump literally just put through an executive order basically banning any central bank digital currency. They've also set up this cryptocurrency council. If anybody checks out the BND live stream from last week on January 25th, I talked kind of all about this and what was going on there. So if you want more information with that, like I say, go check out the live stream, or check out, I have a whole crypto series that I do with covering all different aspects of crypto. But again, this is very much fluid in motion. We'll kind of see what happens there with that. ICBA anti-credit union something's wrong campaign. Now, obviously, we have an issue with credit unions buying banks, with credit unions really in more recent years really becoming very large. And the fact that they still have these tax exemptions, it really begins to call into question if a lot of these credit unions are big enough now to be buying banks. And if these credit unions are multi-billion-dollar organizations, why do they still have these tax exemptions? So, and why do they still not have to comply with some of the regulation, like CRA, for example, that banks have to? So again, that's something that's going to unfold as the year goes on, and we'll see what happens to this. Obviously, this is a huge one here. The Section 1033. This is open banking. ICBA remains concerned with the CFPB recently finalized a rule under Section 1033 of the Dodd-Frank Act, despite its exemption for community banks with assets of less than $850 million, as advocated by ICBA. The rule requires non-exempt banks to create and maintain an API-enabled developer portal, which non-bank fintechs and other third parties could use to access customer data, creating a threat to consumer data security and privacy. Banks cannot ensure the security protocols of potentially thousands of fintechs seeking access to their customers' data. In addition, banks must be permitted to charge reasonable fees to third parties who will financially benefit from access to customer data in order to offset the significant costs of compliance with this rule. Now, ICBA put out a great guide called the Open Banking Guidebook. Again, I covered this in an open banking episode I did just a couple weeks ago. But if you haven't seen that guidebook, definitely go and check it out. I will be doing another episode in the next coming week or two, where I'm going to really walk through that whole guidebook. And I'm hoping to get a couple people from the ICBA on with me when I do that, so that we can really talk about this issue and what's going on with it. I am adamantly against open banking. Don't want open banking. I think it's a horrible thing for banks. I think it's a horrible thing for consumers. And I think it is, if it comes to fruition, heaven help us, because I think it's going to cause an amazing amount of problems for everybody. So the Federal Housing Finance Agency, obviously the FHFA has been pushing in the last year to basically make a lot of changes to the Federal Home Loan Bank, which we really don't want, because they're just, again, if it goes back to the old principle, if it's not broke, don't fix it. Closing the ILC loophole. Yes, this has been, again, another issue that's been outstanding for years. We want to close the ILC loophole so that, certain companies can't just come in and get, basically bank charters. to get into the banking business without having to do certain compliance things as they go through that process. ICBA litigates the CRA and 1071 final rules. Again, more issues carrying over from the last year or so. 1071 rule, that was from Dodd-Frank. That basically was like the collection of small business data. And then obviously the CRA turned into a kind of a major cluster. Last year is basically the Federal Reserve, the FDIC, the OCC, they all were kind of putting their input in. But the changes they made to CRA really made it more complex and more difficult to follow through. And so we'll see what happens with those things. Prescriptive and intrusive FDIC corporate governance proposal. We'll talk, probably more about that in the coming weeks. Improving the M&A regulatory framework. Yes. Definitely need more on this. Definitely need to get back to the way it was a couple years ago where, banks could get a deal done in basically 12 to 18 months. And not this extended, protracted 2 year, 2.5 year, 3 year time frame for trying to get a bank deal done. We just need it to be the normal timelines. That's all. And then finally, the EGRPRA review. ICBA is calling on regulators to conduct a comprehensive regulatory review under the Economic Growth and Regulatory Paperwork Reduction Act, the 10-year review to identify outdated or otherwise unnecessary regulatory requirements. Could totally agree with that one. We should definitely work on that. So this is the ICBA, their advocacy in action for the first quarter of 2025 report. I do have a link to the report down in the description below if you'd like to go check it out. But I highly recommend following this report every quarter because it's a great report to check out. And with that, I will wrap up by basically saying, if you like this episode, please make sure to like, share, and subscribe as it always helps the channel. Remember, we are on Rumble, YouTube, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other videos and content on the channel. I thank you all for listening, and I will see everybody again real soon. Thank you.